Welcome to the Sunday live stream. On Sundays, we have my friend Jerry Hall come in and kind of help us clarify our thoughts. Jerry, welcome back.
Hi, Rob.
Hey, man. So let's do this. So just like we talked about here, me and Jerry were talking behind the scenes, and we're talking about liquidity and how things flow into things. And just like the title suggested, which was this is our Sunday checkup to see where we're at with the markets. And the question is, did we miss some things? Did we miss the top? And what can we learn if we did miss the top or the bottom? So should we, like we talked about, should we buy, sell, or just hang around or sit tight? And I think it's up for everybody, but we're going to take a look at, what that could potentially mean for everybody and where we think we are going. So the first things first, on Sundays, we always take a look at some indicators. And some of those indicators are very well informed to us. The MVRBZ score, the pull multiple, and take a look at some risk factors, so the risk levels. And there's two videos that I have that I call the crypto critical videos. There's a link in the description. One is when I'm going to sell 50 to 80% of all my crypto. And the other one is called the half and half method. So check those out underneath. So I guess the question really would come down to is like, where are we in this situation per se? As we've taken a look at these different indicators that we have, it doesn't appear to me that this is like the ideal time to, actually sell off or what you want to actually sell. So when we take a look at this is a list of what I have in my tagged or bookmarked areas. And we're going to take a look at some of these today, NUPLs, time and risk bands, and MVRBZ. But I will tell you that there's one that I've added recently. The bull market support. Let me bring this up. The bull market's peak signal checklist from CoinBase. Let me put this in here. And it's pretty good because it just gives you like a quick rundown of like if the indicator hit or not. And it's got, like we talked about, pi cycle top, well multiple Bitcoin charts, ETF to Bitcoin ratio, ETHEREUM, MVRBZ score. And so far as hit or not, they have not, any of them. So this is just like a quick thing, but is this like 100% accurate? Obviously not. It just isn't. So what I want to do is just kind of come back and take a look at the beginning. So before we get into that, Jerry, let me ask you this. Indicators and such, do you use them a lot when you're into the trades that you want to do, or are you just kind of like going, okay, this is the sentiment, this is where I'm going? How do you do this?
I don't. I think indicators in a lot of these tools are great for traders. I'm not a trader, and I never have been. I did do some trading, like a classic trade I did, I'm very proud of. The day Brad Garlinghouse on Twitter said the SEC is filing a lawsuit against us and it'll be filed tomorrow morning, I sold all my XRP.
Oh, how dare you! The people would hate you for that. But,
of course. And that was an incredible trade, but it was based off of a set of circumstances, not any indicator in the market. You know what I mean? And so that's me. So I'm not the greatest guy to talk about analytic tools, although I think they're really important to understand, because if you are, let's say, I'm going to make a move in the next 3 months or next 4 months because I got a house to buy or I have a kidney to replace or some need to do something, understanding how the market measures itself would be very, very helpful, right? If I have 6 months or 5 months to make a decision, then using analytic tools like the ones you so eloquently display on this show could really be helpful for somebody to at least maximize what they're trying to do, as opposed to just blindly doing it. And that's the difference.
And I think it's like sometimes people say, well, does it really make a difference? I think it's more of about a control issue. When you feel like you have some understanding of what's happening, you're not just the passenger, you become pretty much the driver. And I think that's the bigger sense. So what we're going to talk about over a little bit of time, we're going to talk about M2 money supply. We're going to talk about rates. We're going to talk about the global liquidity. We're going to talk about the global money supply, and also take a look at what we talk about is like smart money or stablecoin indicators here. But what I want to do first is, what did we miss? Because when I take a look back, I think to myself, is this the same or different? Well, obviously there's a little bit of differences here in this cycle, and we can point those out. And what I was taking a look at was just the recent big event, which was the presidential election in the United States. And I went back and I took a look at November 4th, 2020. That's when Joe Biden defeated Donald Trump. And then November 5th, 2024, when Donald Trump defeated Joe Biden. And what I was taking a look at is, what was the price action afterwards and going into the next year? So remember, this is November 4th, 2020. If we take a look at that, let me blow this up so you can see it. On November 4th, 2020, Bitcoin was 14,101. That was the election day. And the day after, it jumped to 15,500. What is that? Is that like, I'm going to guess that's around 10%, right?
No, a little less.
9%?
8.7654. Yeah.
Great. Thank God you're here. Math is awful. So 10% it is. So we have it like roughly around there. And then, so that's what we have. And it was a pretty good day, right? And then we can see that from there, I mean, we went gangbusters. Again, I'm going to tell you these numbers. 14,000. And then we had a nice little run the whole month, and then a little pullback. And we can just see it actually, little runs, little pullbacks. December, and we went to January 8th. Remember this date, January 8th. So we went from 15,000 to 40,000. That's pretty good. It's a pretty good one. So from those time points, I mean, we're taking like almost what is that, a 2.7x, somewhere around there?
Yeah.
All right. I got that one kind of right. So looking pretty good. So what happened? What the hell happened November 5th, 2024? If we go back over here, Bitcoin was around, and again, October 30th, 72,000. November 5th, which was the election day, I mean, the day before, I should say, 67,000, and it went up to 69 on the day of, 67, 69, and then bang, 75. Not too bad. And that's just in, we say one day, 67, 75. What are we talking about, Jerry, here?
Well, you're talking about these nice little jumps. In the crypto market, that's not that unusual. In an actual market, like in the actual stock market, that's monstrous.
Monstrous.
And so and I think you're going to see over time those are going to start to compress as the global pool of capital that are in these assets increases, obviously.
Yeah. But remember, like what we talked about, like from the point here, and you're right. These are monstrous moves. You go from November 14,000 to December 26,000, then January 40,000. Again, good percentages. But November, when we had the election, to December 16th, I mean, it was even a faster trajectory. So I know when people talk about like this cycle is different, it is different because we really went above and beyond to where it was. Now, here's the problem, is that we topped out and then down we go. Actually, we hit here and then we came back 106,000, 103,000. So the question then is, okay, what do we miss? What did we miss in these situations? Because this one just kept going higher highs, higher highs, higher highs. This one, higher highs, 106,000, 106,000. So roughly the same. And then we started to have lower highs, lower highs, lower highs. I'm not a big TA person, but when I take a look at it, I think to myself, okay, what was the difference here? Because everybody talks about liquidity. So maybe we missed it. So if we take a look at the M2 money supply, we can see that, and people will always say that, well, Rob, it has to be liquidity. And you're right, there has to be liquidity there. But if we go back to 2017, this is the M2 money supply from 2010 forward. Money printer was on in 2017 when we hit 20,000. Money printer was on in 2021 when we hit all-time highs. And then in March 2024, I made this a while ago, but the printer has been off. And actually in January, like we just took a look at, 108,000, 106,000. It says printer's been off, but you can see there's a little bit of an uptick for the M2 money supply. Not like over here or down here. And the question is, well, Rob, what are you talking about? It's because it's offset with the reserves total assets, which is they are offloading their balance sheet. So it's like tit for tat, essentially.
Yeah.
But so then the question becomes, well, if that's the case, and we were stagnant, how the hell did we get up to this nice 108,000? Because we need liquidity. And my thesis is that the liquidity is great, liquidity is good, and it goes up, but it's not just the overall be all. That's got to be it. Then, of course, we can take a look at the global money supply. And if we take a look here, because it's not just America, I know that we talk about it a lot, but the M2 global money supply, it's the same thing. You know, there's times when the global money supply hits and the price goes up, and the price that it doesn't do much, but there's like a lagging effect. So Jerry, synthesize all this stuff I was just talking about for everybody to break it down in easy chunks.
Okay. So what we saw with the first two placards that you put when you said the money printer was on, that was a response to several things, right? COVID, the first time around, and then I don't want to call it whiplash, the hangover from all the COVID liquidity required more liquidity. And what's really kind of interesting for me, and I could be wrong, but I don't think I am, that third placard, when it said the printer was off, you got to remember that was coinciding with Trump being the results of the election being in, right? So we knew the results of the election, even though he was not in office yet.
Right.
We knew that a Republican president was going to have a Republican House and a Republican Senate, and he was going to shake things up. And he had a lot of rhetoric, like, I'm going to do this and I'm going to do that were part of very favorable things for our industry, right? Especially the digital asset space. And so you're right. There is no one thing that will drive markets, but it is absolutely certain that these two events they do drive. A lot of liquidity will allow almost all the boats to come up, right? Liquidity is like a bazooka. Specific news about a specific thing will drive value to those products. Like I can remember as the contraction of the money supply was happening in the beginning of 2024, a lot of the AI stuff just started blowing up. And it was because ChatGPT got released and they started showing people what you could do with an LLM. And I remember projects like FET AI, Akash and Aether and BitTensor and others, a bunch of the stuff in the Singularity Net family. I can distinctly remember, this is February of 2024. All of those projects went to all-time highs. And it had nothing to do with global M2 money supply, and it had nothing to do with politics. It had everything to do with ChatGPT showing the world what a powerful tool AI is. So there's going to be a lot of things that can move markets. Just kind of important to try to kind of, go back and look, okay, when it did this, what were the building blocks of that? Why did that happen? And if you do that enough, you'll eventually get decent at it. Like, I'm not perfect at it. I'm not a master of it, but I can go back and look chronologically and measure news of the day, what was going on in that particular time period, and look at the market and draw those correlations. And hopefully they can help inform the future, although it's, again, not perfect.
Maybe it goes down to like this. Maybe these announcements, like you just talked about, they move the market in some way, shape, or form, or like a short term. Then people remember, oh, that's right, there's this war going on, or oh, that's right, the Fed's not going to cut rates. Oh, that's right, money printer's off. Oh, you know what I mean? So like I think, yeah, and I think like when we see these news stories, I think it's good for the short term traders, especially when you have like a Bitcoin strategic reserve. There's some kind of news out. And I mean, you'll see a little pump, but then it goes like right back to where it was. And without those macro effects, I just don't see things taking off like they should. But then again, I could be wrong.
It would take like this is so funny. Remember, there was all the chatter. There's going to be a Bitcoin strategic reserve. Trump talked about that at the Bitcoin conference, right?
Yeah.
Oh God, this is going to be great. Finally, everything we wanted is going to come to fruition. And then he becomes president, and he signs an executive order to create a Bitcoin strategic reserve. And because in that specific document on that specific day, it did not call out that we were going to have some schedule of buying Bitcoin.
Right.
The market went, oh, Mr. Trump, what the hell? I'm like, oh my God, it's the most bullish thing in the world. And yet and I would have expected the market to absolutely embrace that. And they didn't. Matter of fact, it was like, I heard a YouTuber say it was a big nothing burger.
Yeah. That'd be me.
Yeah, that was you.
So, but I mean, but yeah, like these types of things, it makes sense, but it just, we have to come back to reality, especially like when the Trump administration said, hey, we're not going to have the American taxpayer pay for it. If we find something somewhere in the administration, somewhere we can trim some fat, then we'll look at that, but it's not going to be new tax dollars putting into that. Although
I like that. Thank you, Mr. Trump. Thank you.
Although I'll remind everybody that they are selling things pretty magnificently in the administration so far. Instead of a green card, there's a gold visa. I don't know if you guys have heard about this. They've sold, I think it's 1 million of them for $5 million a pop. And it gives you like front of the line status to become a citizen. And there's some other tax advantage benefits of that. So people are like, well, how could he do that? I'm not a geopolitical expert. I mean, but if you want to give me billions of dollars and, come in here, then I would like you to be in my country as well. Yeah. And Ralph Source, they sold 1 million. Yeah. They sold 1 million they sold 1 million at $5 million a pop.
Yeah, but they didn't sell 1 million of them. They want to sell 1 million.
Oh, they want to sell 1 million to her. Excuse me.
There are 39 million people in the world that could afford it. That's hard to remember. But
excuse
they
me, 5,000. What am I saying? Yeah.
They maybe sold 1,000 of them. I think it was you or Altcoin Daily, somebody on Twitter posted this incredible little thing about Cynthia Lummis talking about the gold certificate that the United States has, and that these gold certificates are valued at the price in 1971 at $42 an ounce is the value of the gold. Is what the gold is priced at in these gold certificates. And if you bring them mark to market at today's gold price and sell them, and with those proceeds buy Bitcoin, you would then be able to America could get to its, 1 million Bitcoin status in the strategic reserve without ever taking one taxpayer dollar. I thought that was a really creative, interesting approach.
I think it was. It seems, and of course there's going to be people that are going to abuse that. That's pretty much how it is, unfortunately. But I think if there's something like that, then they can roll it into Bitcoin. So much the better if that actually happens. I know some people will hate it, some people will love it. It's just how it is. But not to get off two track here, which was the macro parts. Yeah, plus 5 billion. And I was going to just talk about, the Fed funds rate real quick. And I know people would say, well, the Fed, they have to lower. And it's true. It'd be great to lower, but just remember, we've done this in, 3 different settings. When the Fed funds rate was when they were raising rates in 2013, when they were pretty much stagnant in 2017, and they lowered and went up again. And then when they were lowering again, the Fed funds rate, remember the Fed's fund rate is over here, I should say. As it was going up, it was stagnant, chopping sideways, and then we went down to 4.25%, and we hit at all-time highs. So again, like, I think the Fed funds rate is important, but Bitcoin has done this in every single type of situation as far as macro. But it would be nice if they could cut rates. All right. And then lastly, before we get into the Q&A, a little compute, this M2 money supply as well, I will say, if we only blow this up a little bit, 2,000, let's take this piece here. So in pink is the M2, and then in white is the Bitcoin price. It just takes, some people say, well, it just takes a little bit of time. But, you know, the M2 money supply, I mean, we can see that it's, and this isn't, I mean, the M2 money supply, we're talking, oops. Target rate, where'd it go? Here we go. 22 trillion, almost at 20 to 21 trillion for America. M2 global supply, we're talking over $100 trillion. So you would think that in the global markets, we could see some more price action, but from June 2024, I mean, Bitcoin was kind of flat, and it went up from 104, added 4 trillion as far as the money supply, and Bitcoin didn't do too much as well. Again, this is the same time when Fed funds rate were either stagnant or dropping. And of course, there's a little bit of a lag time. So we'll see how this all plays out. But again, we are March 16th. Let me see if it has a up-to-date version. That's pretty good. March 16th, 109 trillion. And Bitcoin went from 79 to 84. I think it's been stagnant. I think we've actually grown a little bit from there. So again, I know people will say, well, it's all about the liquidity. I think everything has to kind of come into play. So Jerry, which part did I miss here?
Yeah, many factors. I think it's very easy to see the trend, right? Especially in a choppy chart. All of the charts that you've shown is Bitcoin on these 4-year cycles is always substantially larger than it was 4 years previously.
Yeah.
And so if I wanted to keep it super simple, I would just acquire some Bitcoin and hold on to it for more than 4 years. That seems to be, there's nobody that's appeared to have not done well under that circumstance. In 4 years, although it seems like a lifetime in crypto, 4 years is not that long.
No, it is not. But I mean, so Jerry, what do you think can happen for all this that we're going through right now?
Wow. Can you imagine the trend continues that nation states adopt this asset? I'm speaking specifically of Bitcoin. That corporations to some level start supplementing balance sheet elements with something like Bitcoin, and then projects that are in the blockchain space like Solana and Cardano and Near protocol and Ethereum, what have you, actually have applications on them that aren't about meme coins, but that actually like do something. Like some of the stuff we're working on at Hypercycle, some of the stuff that there's a lot of projects that are doing a lot of really like value added things, like building smart homes using AI and building, medical care, point of care elements for people so they can monitor themselves better and not have to clog up the medical system to get their blood pressure checked or their blood sugar drawn or their, hemoglobin A1C checked out or, all that kind of stuff.
Yeah. Hey, just real quick, and talking about the future, let me talk about the present. I just want to make sure Getty says 1,000 gold cards is not 1 million. Please do your research before you praise the Orange King, which is pretty funny. So I was...
that Trump is the Orange King?
Orange is the orange man. But I remember, because I saw this and I think I read the article, but I mean, Pomp had this on his show. U.S. government has already sold 1,000 gold cards in a single day for there's 5 million each. I stand corrected. So much more. Crazy. He said 1,000, somewhere like 10. I don't know. But yeah, it's a lot of, it's quite a bit, I would say. But we'll see how it all works out. All righty. So conclusions today is we take a look at the market and see where we're at. I still say that when the Fed, and it's already slowed down the quantitative tightening, they talked about this last week, Thursday, Friday session, and Wednesday, I believe it was. So they're reducing the amount of quantitative tightening. Quantitative easing as far as turning the money printer on isn't there yet, but we'll see what happens. But for me, this is not a time for me to sell. I know some people say we've missed the top and we're going to keep going down, and we're going to keep going down. We're going to keep going down. Me personally, I kind of hope that actually does happen, because I would like it to go down just like we did in 2021 when we had 35% drawdowns. And then the people who said it was over looked a little bit crazy when everything started to go back up. Not to say that it will or won't, but I'm thinking that as time goes on, especially in the next month or so, we're in March. I think the bigger factor is tariff, and we'll see what happens on April 2nd. So maybe it is a thing where April 2nd comes around, we see reciprocal tariffs come off. If you tariff us for this particular product at 20%, we will tariff you for 20% for that particular product that we ship over. And then we'll see what happens in April. Maybe it is a sell in May and go away and everything starts to slow down. But I still say, like right now, I'm still buying Bitcoin, dollar cost averaging. It actually just happened this morning, and a couple of different alts. Jerry, where do you stand right now?
I listened to you and I put in a bunch of limit orders.
Yeah.
And caught Bitcoin when it had that little, going down to 78,000 step.
Oh yeah.
And got really lucky, but that was all the dry powder I have until April. So, but I'm really glad that I did, because obviously we're back into the, low 80s. And so that was like really, really cool. And I'd gotten out of the habit of forecasting limit orders and things of that nature. I just generally bought every Friday. I'd have a set amount, and it was my dollar cost average strategy. But being on your show and thinking about dynamic dollar cost averaging, I decided to implement a dynamic strategy, and it paid off this time. I'm really happy. Thank you.
It worked out. It worked out for us.
It worked out good.
One of the few times we'll take it.
But the point is collect, right? Collect. If you have an income, and you have the kind of income that you can afford a $7 Starbucks every day, then you should be at least thinking about how to collect assets that'll be there for you in 10, 15, 20 years. And if you're not, then you need to think about what's going to happen. Because the one thing I know is at some point, money can be exhausted. And if you're not earning it and you're only spending it, you better have more than you need.
That's the truth, especially as we get older. So anyhow, it was a good points, Jerry. Excellent points. So everybody, shout out to Big E. There's a total of 5 billion in one day for the gold cards. Fantastic. If you like today's video, thumbs up, subscribe, all that great stuff. Now, let's see if you want to get into a little Q&A. We're pretty much done with that section, but let's see what you got for the Q&A. And then, Jerry, maybe we can talk about a little the compute theory as far as AI. Hold on, let me get
Sure.
Romanian says, I'll sell mine for 4 million. That's pretty good. Here's a good, potentially a point. You know how the tariff has been going back and forth, especially with Mexico and Canada? April 2nd is going to extend to May 2nd, then June 2nd, then right down the line. So I wonder if that would actually happen, if they would which would really screw up the markets yet again.
I don't know. I think a lot of what Trump does is theater. You know what I mean? And I'm not sure where he'll settle. Like, I know we all hear what he says he wants, but that doesn't mean where he'll settle.
Yeah.
And so finding that place of where he'll settle, because Canada and Mexico are I mean, geez, we do so much trade with those guys. And that's one of the things the market fears is the effect on GDP, right? The effect on the, or at least the U.S. companies that are involved in these things.
Yeah, we'll see. I mean, we are the biggest. We buy everything. That's what America does.
Oh, we are
everything
of the world.
So I'm just curious to see if this is really going to, if this will affect us more. I don't think it is, or it's going to affect other countries more as we buy. But we'll find out. And people are telling me that markets have already priced in the tariffs. That could be true. I'm not for sure, but I can almost guarantee if April 2nd comes and goes, we're going to extend that, like we just talked about, the market will be a little jittery.
So one of the charts you had, Rob, I think you put in there where you showed global M2 money supply. This is the thing that people don't do a lot of talking about. They don't talk about the euro dollar very much, or dollars that are created outside of the United States, right? And the dollars that are created outside of the United States, when they come back to the United States in the form of debt repayment, like you took a loan or what have you, they're dilutive. They're dilutive to our economy here. And keep in mind, folks, that it's something like 70-something% of the world's total debt is denominated in the US dollar. And a big chunk of that is debt that was created outside of the United States, which created dollars outside of the United States, which diminished the value of the dollar in the United States. Which Trump wants to diminish the dollar. I mean, or at least that's what his people say. A weaker dollar is stronger for our trade outside. And there's an element of that that's absolutely true.
We'll see. And then Ralph says they're going to inflict max pain until October. It's called hyperinflation dollars. Let's hope not. We'll go from there. Hey, but I did want to talk about, there's this one. We had gone back and forth as far as AI. And there was this interesting pitch from Balaji about AI overproduction in China. Check this out.
Yes.
Yeah, and what he said about Bitcoin is this was pretty good. Balaji, if you don't know, he's been around forever. I think, God, what is his eternal life? But let me show this right here. So what he's talking about, and this was, it got my attention because David Sachs even retweeted it and said, that's pretty interesting, or that's interesting, or concerning, I guess, what was actually what he said. And listen to this, because we're talking about AI and what it is. I think there's a big AI race happening, and whoever controls that is like essentially controlling the internet back in the late 80s, early 90s as it came out. But he states China seeks to commoditize their complements. So over the following months, I expect a complete blitz of Chinese open source AI models for everything, from computer vision to robotics to image generation. And I think it was, what was it, TrueDeep? Their AI program that dwarfed, well, it did pretty well, I guess, against ChatGPT and open source. DeepSeek, that's the one.
Yep.
But here's the logic. First, China noted that DeepSeek's release temporarily knocked $1 trillion off the U.S. tech market caps. That's big. Second, China's core competency is exporting physical widgets more than its software. It's tough to have a SaaS, software as a service, right? If you just do physical devices, which China's really good at creating these goods, especially in their factories with cheap labor. But it's not so cheap as anymore, but yeah. Third, China's other core competency is exporting things at such massive scale that all foreign producers are bankrupt and win the market. See what they're doing to German and Japanese cars. I didn't know that makes sense. Fourth, China is well aware that it lacks global prestige. It's been a copycat forever. Fifth, DeepSeek has gone viral in China. While DeepSeek was obscure before recent events, it's now a household name. So you put it all together, China thinks it has an opportunity to hit US tech by selling inexpensive AI-enabled hardware of increasing quality, from smart homes, self-driving cars, to consumer drones and robot dogs. Maybe this is the point for the tariffs. Who knows? Basically, China's trying to do what they always do: study, copy, optimize, and then bankrupt everybody. And there's one more point. Oh, on the point of copying partially abandoned Western values like open source, which seems like the hardest thing to adopt, they did it, which everything is closed off in China. They did build censorship into the release DeepSeek AI, but in a manner that's easily circumvented outside China. So they don't care what happens outside its borders. They care what's happening inside with its citizens. And there was a part. So what can tech do in response? This is the whole thing. I have some ideas, but for at least the next several years, the question will not be what if Google does this, but how can we ensure China's best can't easily compete with this? Bitcoin is one answer, community is another. And we can take it from there. Chinese can't print Bitcoin, they can't copy it. And in China, people like Bitcoin. So that's a long explanation. What do you think about to summarize that, Jerry?
I read that earlier, right? And I was like, I get it. It makes sense. I can see historically where it's true, right? I was alive, and I remember U.S. computer manufacturers getting destroyed by laptop and desktop manufacturers in China. Same with wireless phone technology, wireless communication tech. I mean, they're great at it. And when you talk about cars and things of that nature, Rob, you live in the United States, so you don't see a lot of Chinese cars. I live in Costa Rica, and we are the world outside the United States is inundated with Chinese cars.
Oh, really?
Oh, yeah. Oh, yeah.
That's a thing,
They're
huh?
everywhere. And then also, yeah. I had no idea there were that many Chinese auto manufacturers, but they are, and they're there. They're out there, and they're doing exactly that. They're like undercutting the market. The Koreans are up in arms. The Chinese are up in arms.
Everybody's up in arms about it. I just got interesting. Oh, to bring this home, I was trying to remember like Pelagi's background. He was the chief technical officer for COINBASE. Sorry about that, but pretty big proponent of Bitcoin, co-founder of Council. And he's got over 1 million subscribers, 1 million followers over on Twitter. Probably good guy to follow.
I've always enjoyed his kind of rational approach and view, and so yeah, I follow.
Yeah. Exener says VCR, DVD, cassette tapes, they all dumped all kinds of cheap products on our shores, but they were cheap and we bought them up like crazy. Nothing wrong with that. I like cheap stuff.
You know, one of the interesting things, and they do it here in Costa Rica, and I don't know if we'll ever see anything to this degree in the States, but for instance, it's cheaper to consume Costa Rican goods in Costa Rica than outside, and it's because of import tax, right?
Oh,
These import taxes. And I remember in the United States, it was always cheaper to go out to get stuff from China or some outside country because American-made stuff just always seemed to cost more.
Oh, yeah. America stuff. I mean, speaking of import taxes and whatnot, there's a great documentary called Puerto Rico is Dying.
Oh,
if you want to, we think that, I mean, America and the people that are contained within it aren't all perfect. We can say that. So if you got a chance, everybody's do a search for Puerto Rico is Dying. You'll see like what import taxes can really do. And of course, when people get their stranglehold on a location, it's pretty brutal. It is what it is. Let's see.
Hey, JF is asking a question that I think I know the answer to, but I'd actually like you to answer it.
Oh,
because I remember there used to be a fee, but now there isn't. Correct? They don't charge you to hold your crypto. There is no account fee anymore.
No. So the question here is, if you're not watching the screen, JS says, Rob, how much does iTRUST Capital charge you a month to hold your cryptocurrencies on their platform? Do they charge you plus they're a third party on buying and selling as well? No. So it used to be $29 per month for the Roth IRA, plus it was 1% transaction fee. which even back then I did that, and I was like, well, I don't want to deal with the hassle and hubbub of documentation and paperwork and all that stuff. So I was like, okay, I'll pay the $29 a month. Then I got rid of the $29 a month, and then it was just 1% transaction fee. So people say, well, isn't that kind of steep? Well, look, the thing is that for Roth IRAs, I'm not touching those until I'm 65, which is rapidly approaching. So for me, it's like not too much of a big deal, especially if, whenever I start taking that out, if Bitcoin's worth $1 million, $2 million, $3 million, yeah, the 1% is not going to feel fantastic, but it's in there in a place where there's no capital gains tax. So that's why I like the Roth IRA. Then people will say, well, Rob, you live in Puerto Rico. Why do you even care? Because you don't pay capital gains tax. I live here now, but who knows what can happen. Different things can happen with your life, with your health, with your family's health, with things that you want to do and whatnot. So at some point, I live here. I hope not. The place is awesome. But that's it. So that is the Roth IRA part. Now, on the other part, where they do custodial services, just like what Coinbase Prime is doing with BlackRock and MicroStrategy, they've started that up. So you essentially don't have to deal with the ETF of, if you really want to move things around the weekend, you can do that with them. And they lock it up, and it's cash. It's cash only. So there is no, you can't just start swapping crypto, but you can sell into dollars. Why is that important? It's because for them to actually take money out, it's more difficult than saying hacking a hot wallet, right? So for this one, there is no fee for monthly. It's just, again, a 1% transaction fee. And since I've seen friends of mine lose a great deal of crypto from their accounts, whether that be hot or cold for whatever reason, I diversify what I invest into, and I diversify in the safety checks. So this is what I've done. As opposed to, say, Plan B, who he took all his Bitcoin out and put it into an ETF, which, I don't know. Jerry, what do you think about that?
Again, we had this discussion once before. I could see a time and a place for that. I could see where there would be people that would just want to manage their entire set of holdings from their Charles Schwab screen, or their TD Ameritrade, or their State Street screen, or whatever, right?
Yeah.
For simplicity's sake, I can tell you, I have a friend that, had he done that, he'd still be holding on to a $750,000 worth of Bitcoin. And right now he got it all taken because he fell victim to some kind of elaborate Coinbase phone scheme thing that he unwittingly gave control of his laptop to the attacker, and they drained his Exodus wallet like that.
Yeah, and I know we talk about how Bitcoin and crypto is not used for illicit activity, but I will tell you, if it's a choice of draining your funds from a bank or draining your funds from a hot or cold storage wallet, which one do you think would be easier for a hacker to do? I mean, they've done it with banks, we know that, but there's a little bit more complexity of that. I'll even tell you, for me to get my money out of a damn bank is more complex for me than sending Jerry 10 Bitcoin.
Right.
Which he told me yesterday he was going to do. It was on Telegram. He said, Rob, send me 1 Bitcoin, I'll sell you 2. And I was like, well, I'll talk to him tomorrow, but I'll do this just this one time.
Ay.
Shane says, that's why I moved to ETF. It's not just that, but it's people getting, did you see that video of, it was some lady who live streamed that she had over 100 Bitcoin. It was a live stream, and then she was, some people broke in, and it was there was her little Nest candle.
The live stream?
No. She live streamed that she had over 100 Bitcoin. Okay.
And then
people found out where she was, lived in a nice house, and they tried to take it from her. But then I guess the husband shot at them. It was pretty crazy. I don't know if it's even real, but we'll see.
It's, the unfortunate reality of the world is there will always be people who will put in an exorbitant amount of time and energy to steal from you. I don't know why, because if you were to take that very same energy and constructively put it towards some endeavor, generally you will be pretty successful, right? But that's just the reality. There will always be somebody who would prefer to steal from you than work for their own. And we just have to be aware of that. That's why I change locations every week.
Nice.
I'm joking.
Hey, Jerry, what's one of your best? What do you do to protect yourself? Is it just cold storage? Do you use other stuff?
I do. So I use a Treasure, and I use my Schwab account, and that everything lives there. Schwab's never been hacked. They take great pride in their security protocols. I bank with Schwab, and I love it. I would ask you to consider banking with Schwab too. They have great customer service in that I never pay foreign transaction fees, and living in Costa Rica, that's a big deal.
It's a big deal.
I never pay ATM fees, and in living, being in another country, that's a big deal. And obviously, they do a great job with my brokerage accounts, my Roth IRAs, and my individual retirement account, and my regular brokerage account, and my kids' accounts are all in that same tree. They're just great. So that's what I do. I just trust good people, and I have my hardware wallet that keeps my little crypto wallet all secure.
Yeah, that sounds good.
Yeah,
it's a good way to do things. Also, Mike says the Trump coin is up 8%. Speaking of which, watch out. Let me pull this up.
So I always kind of wondered about that. Is that his son Eric did? I mean, what the crypto son?
Yeah, Eric.
Is this his project?
Pretty much. I think it pretty much is, but it's behind Trump's name. And hold on, 24 hours. Wow, look at that. Volume is 500.
What does the market know that we don't know? That is literally a meme coin, right?
That is a meme. That is the definition of meme coins.
Yeah.
There's absolutely nothing. It's a collectible, as David Sachs says.
Oh, it's a collectible. Yeah. Like Beanie Babies.
Yeah, like being 528,530,256 for volume. So that's something. But it went from a whopping $11 to $11.96. I won't touch that, but if someone wants to go for it, hit it up. Nice collectible. The first presidential coin that essentially gave all the information to insiders and dumped on their investors. That's what happened. People say, oh, it was a rug pull. It wasn't really a rug pull. It was just people at this event found out about it, and somebody had loose lips and gave them inside information. And I think somebody who CryptoZilla, one of the guys that does all the investigations, CoffeeZilla, and he took a look at the time frame it took from when it was launched to when people were in profits to when they were out of profits, and from the time that it launched to the time when all the people bought it up, these snipers or sniped it. I think it was like less than an hour you had. Because everybody knew, a bunch of people knew about it when they got it, and bam. Yeah.
Wow.
Yeah. You mean collectors, exactly. At least Trump goes out top 50. Yeah, it's pretty bad. So, all right. Bull market back on. Well, I mean, I still say there's a difference between like a 4-year bull cycle or a 4-year cycle, a bull cycle, a bull market, as opposed to like a bear market or a bear cycle. To me, a bear cycle is the 3 years we kind of go through, chopping sideways, accumulating. And the bull cycle is the long 1-year blow off top. But within those bull cycles, you can have a bear market, meaning You can have the sentiment drop from greed to fear or extreme fear. You can see a 20% drop over 60 days or more. You can see the macro environment, a degradation. And these are the big factors that I see. And I think right now we're in a bearish market, we could say. I don't know. I could be wrong.
Hey, we're not collapsing, right? The world is not caving in on our heads. We're just not experiencing the exuberance that we did in 2021, and that's okay. That's okay. Build, keep building, acquire. One thing is for certain: those who acquire assets will obtain wealth. Those who continue to put their money into depreciating value instruments will not.
It's true. I mean, really just assets in general. I mean, if you take a look at what happened in 2020, 2021, if you were just in straight cash, like you didn't do so hot. But if you were into assets, you were great. I mean, just ask any real estate developer how well they did in that time frame. They crushed it. And if you don't have, I feel like if you don't have assets now, it's going to be very difficult for you moving forward, because it's not like we're not going to go through inflation or more inflation. That's it. And I don't care what, like, even we were taking a look at, Jerry, we're taking a look at stocks yesterday. We were talking about Visa and MasterCard stock, because I'm trying to get my brother to invest into Bitcoin. He will not do it because he's always been bragging about Visa. And I was like, how well did you really do? And when I took a look, check this out.
Yeah.
No, wait.
Oh, right. That was a 1 day chart. Let's zoom out. Maybe go 6 months or a year. Oh, max. Okay, max is fine.
Yeah, because he was investing back in 2004, 5, and 6. It's pretty good. So he bought it like $16, $13, $12, something like that. Now it's $335. Now you got to wait a long time, but still.
Well, the neat thing about assets in the traditional space, Rob, is that most of your brokerages, I know Schwab and TD Ameritrade and Merrill Lynch and all those folks, if you have a decent portfolio, you can borrow money pretty cheaply against it.
Oh, yeah.
Right. And that mechanism of taking your wealth and not selling it, but collateralizing very reasonable loans against it, and then acquiring more assets that happen to, appreciate, that little mechanism is the wealth building mechanism that's been in place for the last 150, 200 years. And probably even before that in some way, shape, or form. But yeah. So your brother's pretty smart. I don't know what he's.
No, he's not. Don't give him that satisfaction. He's an idiot.
Okay. Okay. And you know what? That's another thing about the Bitcoin ETF, right? Can you borrow against the 20 Bitcoin in your wallet? No, but 20 Bitcoin worth of an ETF, that value you could borrow against if you had it in a Schwab account, or you had it in your Merrill Lynch or TD Ameritrade or whatever.
That is a good one. I'm gonna have to talk to iTRUST about that.
Yeah, I don't know if a Roth is in that same category.
No, not a Roth, but their custodial services that they have. I wonder.
Oh, sure.
I wouldn't think so, but that does sound pretty good. Schwab.
Yes, Fidelity. Yes, Fidelity is one of. Matter of fact, they're the biggest in the world at collateralizing the portfolios. Nobody lends more money against portfolios than Fidelity. Nobody on the planet has lent more money against collateralized portfolios than Fidelity. They're the king of it.
Jeez. So what separates them from, say, well, I mean, I know the answer to this, but let's just take like Celsius when they were doing their loans and stuff like that. just straight up Ponzi? They thought that things, or was it just because the valuations just slipped away so fast?
Two things. Number one, when you're looking at a Fidelity is not creating a product other than the loan itself, right? Yeah. The loan itself is the product. Celsius had all that other weird shit going on, right? Oh, we'll pay you X amount for stable coins and we'll do this and all that. None of that shit's sustainable. Or excuse my language. I'm sorry. None of those things are. I forgot we were even recording for a second. It felt like a very natural conversation. The downfall of all of those things, Voyager and all those things, is that they were trying to provide a yield to people on assets that were not yieldable.
Yeah, the yield was the problem, I think. It's the same thing happened with Voyager. They were chasing Celsius, and they had to go for Three Arrows Capital. And because they tried to chase the Joneses, or the Mashinskis in this case, which was just fake yield, and everybody tumbled. So yeah, it's always
unsustainable yield for sure. Unsustainable yield. When you're collateralizing your brokerage account at Fidelity, we'll say, you're going to have a very specific loan requirement. The underwriting requirements are very clear, right? And there's a risk. There's a risk. It's no different. It's in that sense, it's no different than a margin loan. So you want to be very careful in the amount you borrow versus the amount you have collateralized versus the volatility in the market and obviously the time cost of money, the degradation of money over time. But it's a tried and true method. People are doing it all the time. I have a friend that lives on it. His entire income is his recycling loans through Fidelity, and he just borrows money and increases his loan amount because he's having like the $50,000 that he borrowed last year. He's borrowing $100,000 this year.
Well, this
pays off $50,000, has another $50,000, and he just keeps stepping it through. And so far, he's got plenty of money to be able to continue to do that for a pretty long time.
It's the old adage, the buy, borrow, die, right? That's what.
Why not?
Yeah. Yeah, why not? I will tell you though, we've recently been, not recently, we do medium to long-term loans for real estate. And
Who's we?
Me and the wife.
Really?
Yeah. So
I didn't know that.
Yeah. So what we'll do is, we have we have some friends that are agents, and they'll say, hey, we have this, there's a great house. There's this person, they need a down payment, or they don't want to go through the banks. The banks suck.
Right.
And how would you feel about, doing these types of loans? Okay. Well, what are the terms? Okay. Well, the terms are, it's going to be 15, 20, or 30 years. And the rate is negotiable. It can be between 6.5 to even 8.25 you want. And then
fixed or adjustable?
Fixed, which because adjustable gets kind of crazy.
Oh no, I'm liking everything you're saying so far. Keep going, keep talking.
Yeah, and then we say, okay, well, who's the first lien holders or anybody? Okay, well, it'll be if you guys are going to collateralize this, it's going to be you guys. Okay, we need to be the first lien holder. If something happens, and this is a great lesson with Voyager. They should have just done that. Like, I need some collateral. I'm not going to give you Three Arrows Capital this unless you give me some huge capital like everybody else does. So we'll do that. And then if you look at an amortization table, I don't know if people have ever seen these. Amortization.
Amortization.
That's amortization. Tomato. Tomato. Calculator down here.
You're great.
So let's say, it's already here for me. Let's just take $100,000, right? Mm-hmm. The term is, let's just put 20 years. Interest rate is, I'll put 7.25. So as you notice, of course, for houses, this is something you should know, is that in the very beginning, the interest is front loaded. So you're just like, oh, I just paid, my payment. Let's see. Yeah. Jeez. Interest, principal, ending balance. So my payment is X amount, but everything's pretty much going into the interest. This is your, oh, I don't like this one. Let's do a monthly schedule. There we go. So you're paying $800, right? $800 for month one. And the lion's share, 80% or so is going into interest. That's going to me. And the rest goes to principal, pays you down. And then you really don't start to flip until you get to like your
in a 20-year loan, it's going to be somewhere around 10. 10,
yeah. So these are the things that we do. And then what we put a stipulation there that we don't do prepayment penalties. So if somebody wants to go, okay, now I have it, you want to pay it off? We'll say, sure. So it's just one more way to do things. But it works out pretty well. Like it worked out for our family, because they need help. And then it's worked out for people here in Puerto Rico because there's this, if anybody's interested, which I don't, who knows? Hey, there's Wes. Look at that. Flip flop flipper. Flip flop flipper, Robert Krager. And he's here in Puerto Rico. And there was this good video he did. And it was called Am I Gentrifying? Let me see here. Am I gentrifying?
Sure. Which is in Puerto Rico, that's a real thing.
Yeah.
Hawaii, the same thing. I mean, there's a bunch of places that it is more real of a thing than others.
Yeah. And I've tried to get this guy on the show, but I don't have the right connections or the right channel to talk to him. I'll get him on there. But what he said here was pretty eye-opening. He said, yeah, there's so many abandoned houses here in Puerto Rico. There's a lot, and it's a beautiful place. You're looking at 300,000. He said 300,000 abandoned houses, because here it's a little bit different. Like say like from, I don't know how it is in Costa Rica, but if somebody dies, then it goes to the immediate family, and they can't find the immediate family, then it kind of gets put up for this very long time. And because taxes are so low here as far as like for property, not everything else, but for some reason, real estate taxes are low, is that they just sit around, they languish, and you'll see them like overgrown, just blown out. So, you'll have people like, hey, we want to, build this one up, or this is for us, or this is for a family member. Okay. So then we do something like that. And then you can essentially get back that amount of, or try to get back the amount of real estate that people need to actually, live in a reasonable place. So yeah, that's it.
Sweet. Yeah. What's funny is I'm gonna contact you on that real estate loan thing.
Okay.
I got this beautiful property here in Costa Rica.
10%, Jerry. 10%.
What? Everybody
Just kidding.
5 and I get a family discount 10%.
I think you had a nice one. Didn't you have one like near a waterfall or something?
I have a waterfall, yeah. Matter of fact, I have a lease option on 5 acres that surrounds my property. And that property has 3 other waterfalls that I thought it would be really cool to do kind of a multi-home Airbnb compound or retirement, place or vacation home compoundy kind of thing, gated community type of deal.
Yeah, very nice. Especially So to sum all this up, we were talking about is we're rambling a little bit too much, which was a good talk. Sorry about that. The question that William Wallace wants to know, is it over, yes or no? And I'm going to say emphatically no. Is it over? No. Do I know if this year we'll have another blow off top? I just take a look at where we're at. And again, me and Jerry, we talked about this offline, is that we've never had it as far as like governmental wise, so pro Bitcoin and pro crypto. And some people say, well, that's good. And some people actually say that's bad because the administration here is screwing everything up and it's awful. However, they are pushing for proper legislation to move things in the right direction. And we can see that no further. Yeah. Than say Circle and USDC and stablecoins, which we talked about yesterday. So I think that's a good thing. If we can figure out how to do a ceasefire for the war and actually tie that up, that'd be great. And if we can get into where we don't overshoot inflation to where Jay Powell is like, you know what, inflation's way out of control. And unfortunately, we're going to have to raise rates and not cut rates, because when we cut rates, it's inflationary. Then I think we should be okay. And the last thing I think is it has to go with quantitative tightening, quantitative easing, the liquidity itself, and tariff. Once we get past all those things, I think we should be good. But everything has to kind of come into play. And I think
there's another fundamental structural piece that we haven't talked about, and that is how some of these technologies, specifically AI, but robotics will come into play. How when you can increase productivity, you increase wealth, right? And I don't know if any of you have started playing with ChatGPT and things of that nature, and how many of those things have actually aided your productivity at work. And if they have, then it's not a hard leap to go, if I'm being more productive at work using some of these tools, who else is being more productive at work? And then pretty soon, everybody or most people will be using these tools, no different than it took a few years before mobile phones started catching on. But now everybody has one, right? They're ubiquitous. As the productivity of our workforce and our creatives increases, that will increase the movement of wealth. Wealth will be accumulated. By who? It'll be the people that invest in them, not the people who are necessarily using them. But the point always remains, productivity equals wealth. And where will that manifest itself? Well, hopefully it'll manifest itself in the projects that we're investing in.
Well, that part's true. Let's hope it is. I think we're in the right place at the right time. I've always said I think we're
sure.
For sure.
Path of progress. We are in the path of progress firmly.
Where else are we going to go? All right, everybody. So that's it for today. A little bit long. Jerry, again, thanks for stopping by on a Sunday. I appreciate it. Everybody, if you like today's video, like and subscribe, all that good stuff. Go enjoy the weekend. The market's just going to be the market. It'll get back. So go touch grass, sand, snow, dirt. That's it for today. So thanks, everybody. We appreciate you. We'll see you on the next one. Adios.